and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza, and this is the show where you get all your stock related queries answered by the experts. So stay tuned, viewers. We'll come to that, but before coming to this, let's have a look at what the markets are up to. So Cheryl, first day of the week, Nifty and Bank Nifty trying to hold on to in greens, but definitely a bit of a sell-off coming in from the higher levels.
Absolutely. If you look at the markets, a very good morning to you. Firstly, Shrishti, good to have you back in the studios with all of us. But talking about what the markets are doing, pretty subdued trading session coming in for the benchmark indices. As you can see on your screen, you have Nifty that's trading flat with a positive bias as we speak. Let's look at Nifty Bank. That's marginally outperforming the benchmark indices in today's trading session. 0.3% uptick coming in for the Nifty Bank as we speak. Talking about the list of gainers on the Nifty at this point in time, you have Tech Mahindra, HCL Tech, Infosys, TCS and Wipro. So all the top 5 Nifty companies or Nifty gainers today are from the IT pack. So no points for guessing the fact that Nifty IT index is holding on with good strength in today's trading session. But on the losing side, you have Adani Enterprises that are seeing immense selling pressure in today's trading session. 2% downtick coming in for the Adani Enterprises. BPCL, Mahindra Cipla, as well as JSW Steel are the other set of losers in today's trading session. So to take a look at the way how the sectoral indices are performing. So you have PSU Bank Index, that's the top sectoral gainer as we speak, 1.8% uptick coming in for the PSU Bank Index. You also have IT Index that's holding on to good strength. Power Index also seeing good strength in today's trading session. But on the flip side is the metal that's taking a knock, 1% downtick coming in for the metal index, followed by the auto index, and as well as pharma index that's seeing some sort of a pressure in today's trading session. Remember that we are going to enter a phase where you will have a lot of Nifty companies reporting their Q3 earnings starting from this week onwards, and all eyes on that. But before we talk about which are the earnings that are expected through the course of the week, Shrishti, let's put the spotlight on HDFC Bank, which reported its number on Saturday.
Well, yes, absolutely, Cheryl. That's the leader because this time around, it was a stable third quarter for the HDFC Bank. The NPAs remain flat sequentially, making it largely stable in the terms of asset quality as well. Talking of NII, that saw a jump of over 24%, while a fall in the provisions boosts the profit by about 18% on the year-on-year basis. That was in line with the estimates, but let's go across to our colleague Harsh, who is joining us with all the number crunching. Over to you, Harsh.
Well, yes, Srishti, we did see a 25% uptake with regard to the net interest income of HDFC Bank when I'm looking at the number year on year. But really, operating profit came in 13.5% higher on a year-on-year basis, and that's largely on the back of higher OPEX. What has OPEX done? Up 27% on a year-on-year basis, 11% up sequentially, and that's what's really impacted the operating profit number. It's largely in line with what the street was penciling in, but just trying to break the numbers further, 700 new branches opened by HDFC Bank in this particular quarter. Out of the 1,400 branches it has opened over the last year or so, in a single quarter, 700 branches. A really large chunk there, and within this, employee expenses up 17% sequentially, 31% on a year-on-year basis. So really ramping up that cost-to-income ratio to 39.4 now, so quite high there. But we're looking at a lower provisions number than what the street was penciling in. Provisions have come in at 2,800 crore, and that really sees profit after tax remaining where the street was penciling it in. So profit after tax has come in a solid 18.5% higher on a year-on-year basis. On both sides of the balance sheet, very good growth. Let's talk about deposits first. That's where the focus is at the moment. 20% growth on the deposit side. Solid growth there. CASA grew 12%, and they're expecting CASA to trend lower from 44% to 39 to 40% on a normalized basis. Where going forward on the advances side is concerned, solid 20% clip is where the advances grew at, but the drag was the wholesale deposits, down 1% sequentially, largely on the back of 30 to 40,000 crore of wholesale deposits absolutely left, wholesale advances absolutely left untouched. That opportunity was let go of by HDFC Bank. They suggested that the pricing wasn't right on that particular piece of loan book. So clearly they've not grown as fast as the opportunity was in the market. NIM's currently at 4.1%. That's where it is at, and really the NPAs have gone nowhere, absolutely flat. That's exactly where the street was penciling it in, largely in line set of numbers from HDFC Bank.
For that, Harsh, for outlining the numbers of HDFC Bank. Another quarter, another set of stable numbers coming in from HDFC Bank. But what are the opinions of our expert, whether HDFC Bank is worth looking at from current levels, and if you're invested, what should you do? So let's bring on board our experts for today. We have Aditya Agarwala as well as Shahina Muqaddam joining us on the show. A very good morning to you, Shahina, as well as Aditya. Thank you so much for joining us on Buy Now Sell Now. And Shahina, coming first to you. Another quarter, another set of stable numbers coming in for HDFC Bank. But do you think for the stock price or for someone who's looking to invest in HDFC Bank makes sense to stay put with it, given the fact that the stock price performance hasn't been as great as expected in the year, at least 2022? You think 2023 will be a year of comeback for this one?
Yes, I believe so, because the large consolidation that took place in the last 1 year, I believe, was more on the the issues regarding the merger, the timelines, etc. But now, given the fact that 1 year forward, we are going to see the merger totally put in place, I think valuations at 3 times price to book 1 year forward is not expensive at all. In fact, it is slightly lower than 3 if you look at the total, if you include the valuation of the subsidiaries. And also, I think the current numbers that they declared, HDFC Bank, were very much in line. The only issue, the small issue that was there, was on the margins, which I believe, as the deposits and loan book gets repriced, I think the margins should improve going forward. So I would believe that if an investor is holding on to the stock, definitely continue holding for the long term. You can see a decent upside. Also, for the shorter term, you may see a bit of consolidation, but I think for a portfolio stock, one should take that into their stride.
The fundamental view coming in on HDFC Bank after a muted set of growth in 2022 this time around. The valuations look quite reasonable at this point in time, and the results were also in line. But coming to you, Aditya, clearly in 2022 it was just 7 or 8% growth on the stock price, but the stock did show some hopes on the breakout back in December 2022. Going ahead, what do you feel, that is there another breakout that is pending for this particular counter? Would you like to bet on this one?
Morning, Srishti. Morning, Cheryl. Oh, absolutely. I believe if you have to look at one of the private sector banks, it has to be an HDFC Bank. Axis and ICICI have done their bet in 2020. Maybe 2023 will belong to HDFC Bank. And as you mentioned, it's on the verge of a breakout. If I take a look at the monthly charts of HDFC Bank, it's approaching that major hurdle of 1720 on the upside. If that is taken out decisively and HDFC Bank starts to trade beyond that, high chances stock will test levels of 2100 on the upside. Immediately 1640 is the hurdle, maybe for the week. If that is taken out as well, I believe traders and investors should latch onto the stock. At current levels also, they can buy, and on breakout beyond 1640, they should add on to the stock. The initial targets will be 1720 to about 1740, which is the immediate hurdle and the major resistance on the upside. And if that is taken out, like I mentioned, 2100 will be the target. Now, if I take a look at all the private sector bank setup, definitely HDFC Bank at the moment stands out. Axis has to be the top pick, followed by that HDFC Bank is something that I will bet on clearly if I'm looking at a private sector bank.
All right, so that's the view coming in from both of our experts on HDFC Bank and what should one do, and whether the year 2023 will be a turnaround or rather comeback year for HDFC Bank's stock. But on that note, we slip into a break on this edition of Buy Now Sell Now. But when we come back, we'll be back with your stock-related queries. So viewers, don't go anywhere.